Assalamu Alaikum everyone, welcome back to another video. In this one we are looking at Skyworks Solutions, but before we look at the financials of this company and look at everything about it, I just want to talk about a couple of things. Okay, what you see here is my portfolio. This is in Freetrade, not Freetrade, Trading 212. I also have an account with Freetrade, so both accounts I use it, but this one is my ISA account. ISA is tax haven if you like. I mean, I've been protected up to 20,000. I can put up to £20,000 every single year and I will not get taxed. Basically, that's what it is. So this company have now stopped taking new customers in the UK, but in other European countries, I think you can still sign up. I'll put the link down in the description, so if you want to, basically you can use that and put your name on the waiting list if you live in the UK. Also, I have a Freetrade account, and Freetrade is also a great company as well. But it's not free completely, so you have to pay for ISA account. So if you pay about £3 a month, you get an ISA account and you can top up to £20,000 without having to pay any taxes. So this is my account. The reason I'm sharing this with you guys is because some of the new brothers and sisters have asked me where I got this from. So that's how I just wanted to explain that very quickly. A lot of brothers and sisters have asked me a lot of questions, so I'm going to sit down tonight and answer as many as I possibly can. Some of you actually made a video request. This is on my to-do list, inshallah. So right now, between family and work and so on, it's been hectic, but inshallah I will get to it at some point. Overall, the markets are doing okay. They've been up and down in the last few weeks. That's just expected. Some of the companies that I own, like Qualcomm, is right now today, for whatever reason, 8%, 9% up. Again, that's a classic. So Tesla is down and so on. So again, they will go up, they will go down, but in the end of the day, what you need to think about is the long term. Buy, hold, and forget it. If a company changes, obviously, their financials, or you don't think the company is worth owning it anymore, then obviously you might need to think about that and you must make some change. I definitely did that this week, so I will be sharing that with you next couple of days. I'm going to do a portfolio update next couple of days. I've sold in stock. For the first time, I actually completely sold out of stock for good reasons, and I'll explain that, what happened with that stock. But let's go back here and talk about Skyworks Solutions. This company is one of the semiconductor companies. They actually are very similar to Qualcomm and Broadcom. They deal with a lot of Internet of things, as well as 5G, as well as all the new artificial intelligence chips and so on. They make all the infrastructures that are needed for networking and so on. So they're really small company, but really good company. Very similar to Qualcomm and Broadcom, like I said, in terms of 5G and so on. In terms of for example, Internet of Things, mobile, and emerging. So these are the three industries that this company involves. Okay, so smartphones, mobile offices, tablets, for example, broadband home, and all that stuff they involved, as well as machine learning, artificial intelligence, 5G infrastructures, home fitness, smart cities. So they are in the right industry, in my opinion, and I love the tech side of it, and I love the semiconductor companies. So they are in that market, very, very similar. In terms of their financials, if you look at it here, gross margin of 53%. I'm not sure if this is year to year, if this is basically last couple of years. They haven't basically analyzed that, but that's what we're going to look at now. But the margins here look absolutely brilliant if that's the case. So first thing we're going to look at, as usual, is the financials. Right, so $3.8 billion in 2018 to currently $5 billion. So that is heading the right directions. Gross profit, so we're looking at 1.9 to now 2.5. So that is a very healthy thing. Then when you look at their net profit from 90 million to right now 918 million, to right now $1.5 billion. So that's brilliant. That's a very good, healthy balance, basically income statement. Next is the balance sheet. So here we're looking for two things. We're looking for the current assets against the current liabilities. The current liabilities is the money that the company has to pay off in the next 12 months. The current liability, assets is basically the money that they can liquidate to pay off this much in the next 12 months, and they have enough. So 658 million to basically 2.8 billion dollars. So they have enough. And then you will look at the last 4 years. We're looking at ordinary shares or shares outstanding, and from this to this, it looks like it's actually going the right direction. So it's absolutely amazing to see that, because you want the company to buy back shares, so your own shares is now worth more. Free cash flow, I don't think they have a great free cash flow in my opinion, but that's $1.1 billion that they can use to pay off, I think, about 1.4% dividend. Okay, for some reason Yahoo Finance is not cooperating today. Right, so there we go. 1.4% of dividend, and they have $1.1 billion to pay that off. Not a lot of money in the bank, but they do have something there, and they are growing really well. So let's have a look at what the analysts expect from this company in the next couple of years. And when we look at the revenue estimates, you can see here sales growth is about 11.4% next year. So this is 2022. 2023, we're looking at 8.4% growth as well, sales growth. Now, when we look at the growth estimates generally, so you're looking at current year of 10%, then 11%, and then 12.5% the following year. Now, here we're looking at what the analysts basically think about the company, and as you can see, we've got 15 that said it's a buy, 7 that have said that's strong buy. Okay, and overall everyone thinks it's almost a buy, just heading towards a buy right now, and they expected the average price to be $205 per share, and currently trading at $162 per share, height of 255. Now the next thing we're going to look at is looking at Morningstar, and as you can see, it's 4 stars. 4 stars means the stock is really cheap. Is now discounted at 23%. Okay, so they expect this to be 210, but currently 162. When we look at similar companies, so TipRank again is more or less similar story, and there are a lot of analysts that are looking at this. And one thing I've never mentioned about these analysts is the fact that they have different ratings. So if I hover over this one, it says basically average return of 4%, almost 25% return. This is basically their return as an basically as a asset managers. Okay, so again, I'm not sure who they are. I'm sure they exist. I'm sure that is the truth. Otherwise, this website would not have published all of these people. But again, you need to think about some of these guys are bullish on certain things because they get commissions and all that stuff when the stock goes up to a certain price, whatever. So you have to be careful. But generally, they all agreed that it will be almost upside of 40%, 37%, 34%, 132%, $380 per share. That's Credit Suisse, and that's a huge company as well, coming from someone who's actually have an average return of 28% in the market. Now that doesn't guarantee success, but obviously it gives us something to work with. And there are a couple of basically companies, Goldman Sachs, for example. Goldman Sachs, have said it's a hold at the moment, but it's still upside of 13%, which is absolutely fine, because right now it's 160 something, but they expect it to go up to 180. That's more realistic. To me, this is more realistic. I'll probably say it's a buy, and about that much. Okay. The next company we're going to look at is no, that's it. That's the last one I wanted to look at. Right. So in terms of overall where this company is, I think if Morningstar, which is quite very, very harsh, I like them in terms of that side of things. Okay. If they think this is basically discounted at the moment 23%, I think that's great. So in my opinion, yeah, it's a great company. I do own Qualcomm, which is very, very similar, in a very similar business, slightly bigger than this company. So Qualcomm is actually bigger than market cap is actually a lot bigger than Skyworks Solutions, because Skyworks, I think it's about 26 billion or something like that. Yeah, $26 billion market cap. So again, I prefer definitely Qualcomm, but considering how cheap it is right now, if I didn't have Qualcomm, I would have basically initiated a position right now, because I actually like the fact that this company is in the right industry. Their financials look good. The dividend, I think, is a little bit high. I prefer if this was slightly lower and then they buy back more shares instead of paying that dividend. But again, it's probably a good thing that they're actually paying these dividends. But my only concern is they only have $1 billion of free cash flow to actually pay back that and obviously buy back the shares as well. So again, great company. I do basically like this company, but I don't think I will be buying it anytime soon. But I do like the way the business is at the moment. Right, I hope you enjoyed that video. Can I just ask one other thing as well, brothers and sisters? Last couple of videos, I appreciate, honestly, so a lot of you have actually liked that video. Thank you for doing that, because that meant there were more brothers and sisters subscribing to the channel. So the more people the more likes a video has, the more people it reaches and the more people we can help, inshallah. Remember, the end goal is to help the other brothers and sisters out there. And thank you for asking all the questions. Inshallah, the next couple of days I'm going to sit down and go through all your questions. There are a couple of videos I'm planning to do based on the questions that you've asked as well. So I'm not ignoring anybody, but it's been quite a hectic couple of weeks. So inshallah, once I get a little bit of time, I'll sit down and answer some of your questions. If you ever have any questions, as usual, please ask. Enjoy your weekend. Assalamu Alaikum. Take care.